Hey everybody, welcome back to Options Inc. Today is 29th December 2022 and we are back at the trade recap for the small account challenge. Now if you remember from my previous videos, I am basically trying to grow a small $100 account to $10,000. Before we even get started, I'll tell you this much. Today was a bad day for the account, but a great day for the market. Let's jump right into it. So here we are, SPY 2-minute chart, 29th December 2022. Now, you could look at this and say, this is a great day. There's a lot of people who made a lot of money today. Everything was sky high. People are thankful Santa came back to the market. But instead of Santa, I got the Grinch. So let me just show you right now. I am warning you, this is going to be a messy chart with all my trades. Many of them I didn't even actually chart. And before we get into it, I want this to be a lesson to you and to me to remind yourself of following your rules. And that's very important to understand psychological and emotional well-being in a trade and how to take a loss, because everything you're not supposed to do, I did. No! Behold the chart. You're looking at many different things. So let me break it down for you. Step by step, trade by trade. This is the morning. Looking at pre-market, it's coming down. Here's a huge zone right here. Let me draw this line for you. Here's a zone right here. You see it bounce down from this line plenty of times. Market open, it looks like we're slumping down. And as it's slumping down, on a 2-minute chart, I thought I should get into a put position. This candle is very volatile. The first few candles are very volatile. And the problem with trading a $100 account on Interactive Brokers is that you don't have live market access because your account must be over $500 to have live market access. So that means two things. Number one, I don't see the prices changing at all. Okay, this is the options change. These prices don't move live. Second of all, when you want to buy, a message pops up saying you don't have market data, do you want to continue? And then you have to click an override button to actually execute the order. So with that being said, you understand how, now I don't want to make excuses for my execution, trying to get into a trade was probably a bad idea. I was going in for a scalp. I did get the move, but my entry was bad. I was looking for the move to come down to this upper part of my zone, which it did, and I was really happy about that. But the problem is, by the time I clicked it, I couldn't see any of the prices, which meant the first out of the money contract, I couldn't see the prices, and that in the morning is usually around 130, 140, even 150. So I couldn't even buy that. Second of all, when I did click execute order, that window popped up. I had to click that again. Mind you, this is moving really fast. By the time I got in all the way down here. It dropped down here for a $2 profit and then ripped all the way back up. And this candle closed right up here. So now I'm thinking, okay, before I could even think to see what the next candle would do, the next candle opened up so damn strong. Look at this. This shot up within seconds. So you can assume the problem here is that the fact I got out midway was great to click the close button and then click the override button, then actually get executed. Oh, and one more thing. Another problem with Interactive Brokers under $100 because you don't have live market access. You can't buy the bid or sell the ask. You can only buy and sell at market prices. So every time I bought a contract, even if I bought this contract up here, because I bought a market order, I paid more for this contract. So it's as if I bought it down here, right? And when you sell it, same thing. It goes against you harder. That's just how market orders work. But anyway, I didn't let this first trade take me out of trading, but truth be told, you'll realize why this first trade being so negative on a $125 account was negative $36. That's a huge hit. This trade had a huge impact, but I didn't want to close the day red $36. So instead, as it was going up, I got in and rode it up, saw this wicking and got out here for a healthy $5 profit. So now here I am. Okay, I took two trades. One of them was a negative $36, huge hit to the account. And my win, because I bought market, even though I bought it down here, because I bought market order, I paid way more for the contract, and it takes a lot more for the contract to move. And then I eventually made a measly $5. In comparison, I'm down essentially $30 on the day. It's bouncing around in my zone. I sit on my hands because I'm like, this is a chop zone and I want to see what the market does here. But in the back of my head, this red was staring me in the face, and slowly but surely it was making me act and think in a way that I should not have. The market starts ripping, and here we start the story. Trade number 3, little scalp. Why did I not take any of this move? Very wiki, and I didn't want to add to a negative $30 loss on the day. So I was very hesitant here. This part right here, very hesitant because I didn't want to make a wrong move, but then at the same time it's moving. So now I have lost sight of what the chart was telling me. Getting emotional, the psychology of a loss, so on and so forth. And not just a measly loss, but a pretty big loss on a $125 account. Eventually I take a trade as it's breaking into the zone, which is also another thing that I said I was not going to do. It goes up, it starts stalling right here, and then I get out. I get out for $2 profit. Comes down at this point, actually, this candle right here, in these two candles. In these two candles, after this red candle, it goes back up. So I'm thinking, okay, it still has the momentum. We have been in an uptrend. It's holding higher than the 9 EMA. Maybe we keep breaking up. Eventually I did get that move, but the fact that I bought here and it immediately reversed on me put me in a lot of mental pressure. I was down a really good bit here. The account was down $50, but eventually, it bounces back up, goes above the 9 EMA, and eventually we get the move. Now this arrow is wrong. I actually sold it up here on the top of this wick as it approached my psych level, this midpoint psych level area. I sold it here for a healthy $2. A healthy $2. And that's another thing about 0 DTE contracts on SPY. If you have a hard move against you, it takes a lot, like that kills the premium and the value of your contract. It takes a lot more than just coming back up to break even or to even be profitable. If it goes hard against you, that slices the value by like 20% immediately just because it moved against you. And then it needs to do some work of moving back up to even come back to break even. And on top of this, I bought at the top and I bought a market order. You could not overpay more than I did. I would say I bought it up here at the very top of that wick, right? So I made a measly $2.61. So here I am, $2, $5. 3 trades green, 1 trade red, and that is a negative 36. So as of right now, I'm probably sitting at like negative 26, negative 25. I could have ended the day right there. I considered ending the day right there, but a part of me was thinking, huge loss. I don't want to end the day in the red because that's a huge red to begin with, and it seems like there's still momentum. What if I can catch another trade? We are getting into over trading territory right here, and the emotions of everything is building up, right? This pain I had to sit through was building up. That had a huge effect on the emotional state and judgment of trades. It chops around a little bit, then I take my next trade as it's climbing back up. I don't trust these, right? It's not like I would have looked at this bottom part right here, because why is this bottom part important? It's important because this is the lower part of the zone. It bounced off the zone. You see this candle, the black candle here, touched the 21 EMA and was wicking. That means buyers were present. This was a really good support zone. Instead of getting in here, I saw this run up, and so unable to trust any of this because all the emotions were playing in my head. When I saw it break above here, this zone right here with all the wicks, I thought, okay, so at least it'll test this area right here, my top zone. So I got in overpaying market orders on a bullish momentum, making the contracts more expensive anyway. And then, wouldn't you know it, it goes against me immediately. I tried to hold it to see if it retests, tried to come up, but eventually went down, and I closed the position as it crossed the 21 EMA for a healthy loss of $16.85. So now you can imagine what I'm thinking. Started the day off red because I got the direction wrong. Very fast, didn't take into account of market orders and the fact that I have to click a different button, can't fully use my keyboard hotkeys, and the fact that it moved and the volatility was high. Contracts go against you really fast. So then I'm still thinking, okay, you know what? I really don't want to close red. Still over trading. It started coming down, started breaking through. At this point, I'm like, okay, maybe the stock is going down. It's closing below the 21, below the 9 and 21 are curling. So as it's coming and breaking out of the lower part of my zone, remember this zone has been very prominent. Even yesterday, stock came up here into this zone, slammed down whole day, right? So in my head, that's still working. So I'm like, okay, probably a huge sell zone. Saw short. I go short, and wouldn't you know it, bounces, fake breakdown, goes back up. Then I'm like, okay, well, at this point, we have a strong bullish momentum the whole day. Even though the 9 and 21 turned, it's going sideways. Price is breaking above the 9 and 21. I close out negative $12, adding to my loss. At this point, I am down $70, 7-0 on the account. Huge hit, but I don't give up. Persistence is a good thing. The problem here is that because it's a small account, there is no room for losses, especially 0 DTE contracts. You have to be right. And if you are not right, you're going to slice your account very quickly. So on top of buying market orders, overpaying for the contract, I have to click another button. I don't have subscription to market orders, and I can't see the price move live. So I don't know exactly the prices. They are 15 minutes delayed. So persistence can be a good thing, but all these emotions, the psychology behind the losses got to me. I've had days where I did take a losing trade, but later on I recovered it. But that's when I was looking at the chart. You know, I was looking at the prices, seeing how they moved. I was more focused on the chart rather than the emotions and psychology clouding my judgment. So my final trade, I thought, I'm going to take a trade as it's moving up, as the EMAs are curling down, actually. Curling down, this is the trade right here. So this is a trade. I thought it's going to come back down. Fake breakout went up right here, and it started coming down. So I'm like, okay, I'm going to catch the breakdown. Throughout this whole time, the level 2s are really moving fast. So I'm like, okay, we got the momentum. We could break down, go short here, close out on the next candle, negative $12 again. But I don't let that stop me. I quickly switched to a call on the next candle, and that one moved. That position moved really well. And I eventually closed the trade at the top for $38 profit and 44 cents. That was the move, right? So even now, after I was down basically $70, $80 on the account, finally closed out, and now I'm down $29. A lot better. And it's a lot better because I know from our previous experience, we can easily grab contracts and they can run $10, $20. They can run 100%. They can run $80. So I can recover this tomorrow. I should have just taken my loss and left, but I didn't. Moving on, lack of market awareness because of the emotion, the psychology. Usually what happens when the market goes up is that it'll run up in the morning and then stabilize and then consolidate for the rest of the day. That's something I knew, something we saw. You can go back to any major green day on SPY and see this is the case. We run up and then we usually consolidate. We're in our zone over here, but as it's coming back up, I'm like, okay, well, breaking back up against the 9, maybe we keep running up to this zone. This was my target. We failed, went down, closed it red as it crossed the 21. Tried it again, tried to get in again on another call right here. Didn't work out in my favor, closed it out. At this point, it's breaking down, so I'm like, okay, maybe we had our run up. Now we're gonna start breaking down. Back down into our zone. Go short, kind of positive, $3 for $4. Again, I'm overpaying. Went against me, went all the way up, closed. I'm like, okay, I'll switch. Because now we've tested the top zone plenty of times, we're probably gonna break out now. Guess what? That doesn't happen. And then finally I take another 2 trades. Actually, I take another 1 trade, trying to go short. This whole time, I have failed to take a step back and realize a couple of things. I'm sure you're starting to see all the wrong things you could do. This is a channel, right? This right here is a channel right here. Up, down, up, down, up, down. And I got caught up in all of that. This is what we call the chop. And you should never trade the chop. And now you can see why. On top of buying market orders, not seeing the price move live, it's really hard for it to go positive. And by then, it already moved. And so, I'm not saying you can't trade the chop if it's very clear, right? Especially if it has a good range, you definitely can. You definitely can scalp it. But I was expecting another big move. Throughout this whole thing, you see a lot of expecting, and you should never expect. You see a lot of how one move can psychologically mess you up. You can see how overtrading can be bad when you're influenced by the psychology. And so the final total result of this day, don't get me wrong, this day was great. A lot of people made a lot of money, ran up, huge move here, amazing. And I should have ended it right here, but I didn't. So here's the end result. Negative $93 on the account. The account is sitting at $33. Red after red. Few green, but very small except for the last one. But because there are 0 TTEs and you're buying market during a green candle, So if you're buying calls, for example, here's another thing about market orders and pricing of options contracts. If it's green and you buy green, you are gonna pay more for this contract compared to if it was red. If the candle was red and you bought calls here, you would have paid much less. The reason being, if it's going towards your direction, the prices are inflated. On top of that, I was buying market orders. So if it's going towards a direction, you're always gonna pay more for it. If you're buying market orders, you're gonna pay the most for it, and vice versa when it's going down. So that's why it gets really hard to even break profit. Even after you bought it at a good time, stock goes up, but you don't break even. And here is my final point. Even with this loss, the account still has 33 in it. Yes, it's very difficult, but you can still trade. Usually, what people should do is take a break. If it's very psychologically or emotionally damaging, you should take a break. Go over what happened tonight, journal, things like that. But the account is not dead yet, and I am determined to keep going until it goes to zero, until I cannot trade it. So day 3, huge, unnecessary red day, especially in the very beginning. And especially because in the morning I wasn't aware of how the lack of market order subscription would affect trading and scalping high volatile moves, because this moves so fast. The fact that you're clicking a buy button and then clicking override to execute the order, and the fact that you can't even see the contract prices, you can't place bid orders. So you're buying market, and that makes everything so slow and distracting. The thing is already moved and it's coming back up. Wasn't aware of that in the morning. Wasn't aware of how much it would affect it. But even so, I could have ended it right here, right? Be negative 25 for the day, come back tomorrow and keep going. But I didn't. So here is a great example of what you should not do. And it's hard because psychology is not easy to get away from. And another thing, guess what? This is 12 p.m. noon. What happened after 12? Everything I've taken was a loss. What happened after 12? There were no moves. What happened after 12? It was just chop. All the move happened in the volatility in the morning. And guess who traded after 12? Even though the rule said I shouldn't. That's right. Very clear example of why we need to follow our rules, or why we even need to have rules. Otherwise, we will be ruled by our emotion and psychology. Regardless though, tomorrow I'll come back and attempt to bring this account back to life. So I'm glad you guys joined me in this video. I hope you can clearly see what you shouldn't do, and hope this helps with your trading. You know, oftentimes people learn, most times you learn the best from mistakes. That's the only time you ever really learn. And so don't overtrade, and basically don't do what I did. Follow your rules. That's the discipline. Anyways, that's it for today's trade recap. Let's see what happens tomorrow. And if you like content based on trading, all the good and the bad and the transparency and my journey as well, please subscribe, like this video if you found anything valuable out of it. And besides that, I will see you in the next one. Catch you later. Bye-bye.